Just as the U.S. economy begins to show some small signs of recovery, there's a new threat on the horizon: inflation, which could then lead to a period of stagflation. Monica Bertrand is here to explain that story. Monica.
Not very surprising. You know, people have been talking about this for a little while, John. And the inflation worries are triggered by rising commodity costs, especially energy. Now, the S&P Total Return Index, which tracks metals, energy, and agriculture commodities, jumped 20% last month, primarily because of rising oil and gasoline prices. That's the biggest monthly percentage gain since September of 1990. Now, AAA says that gasoline was up to an average of $2.59 a gallon last week from $2.05 a gallon the first week of May. Now, economists say that a 50-cent a gallon markup takes away about $70 billion of consumer spending power. Federal Reserve Chairman Ben Bernanke told lawmakers last week the central bank is staying vigilant on inflation.
For the time being, we still need to maintain a strong, supportive position in order to help this economy begin its recovery. But as that begins, at some point, we're going to need to begin to withdraw the policy accommodations so that we can avoid any inflation down the road.
Now, here's the thing. It's not just oil and gasoline on the rise. Copper prices are also jumping. Copper's up about 59% this year as of Friday, although the price is still well under last year's all-time high of about $4 a pound. The big question is whether a jump in inflation would overwhelm the recovery before it takes a stronger hold on consumers. And that, in turn, could trigger a return of stagflation, a scenario of rising prices and, John, falling demand.
Something else to consider. All right. Thanks, Monica.